over fibs using the fib retracement tool to be able to find high probability retest areas and be able to know where we can expect a reaction, either for the upside or the downside, right? So now that we've done all these steps so far, right, marked up our highs, identifying our range and our structure shift, our order blocks and fibs, now, I mean, our order blocks and imbalances, sorry, now our fibs will connect into this to find us entries. So let's go ahead and look at today, for example. Okay, so we knew that on the 4 hour in this scenario, let's say this is our 4 hour high. We broke above it, right? So now that we broke above this high here on the 4 hour, what forms after a break? We usually have an order block in an imbalance form, as you guys can see here, right? So what am I gonna do? I'm gonna take my fibs from the low of the body of the candle. I'll say it again. From the low of the body of the candle, not the wick, but the body of the bottom of the body of the candle to the most recent high closure. Why am I not doing this one? Because on the 4 hour we haven't closed just yet. We still got almost 2 hours left, but this is already closed. So now what I do is I draw my fibs like this, right? So I'll just label them. So my 50% is the equilibrium, right? So meaning pretty much the 50% is like the area where it tends to, have the reaction right away from it. Sometimes we can get to the optimal premium. There's really no right or wrong answer. You're never really gonna know, oh, is it gonna get to the optimal or the premium? We never know. But that's why we have the levels drawn out so we can know and expect the reaction to it. So I'm gonna show you guys what I mean by that so you guys can see it all on live here. But let me go ahead and label them. And I'm going to give you guys like 10 seconds to go ahead and screenshot the settings for the fibs so you guys can have it. So I'll give you guys 10 seconds to go ahead and screenshot these. This is the settings I have on my Fibonacci retracement tool, so you guys can use it exactly as I do, and you'll be able to see how they hit, okay? So you guys should have screenshot it now, and done. Cool. So now I'll delete it. So now all I do is I just wait for a retest into these areas here, right? Okay, and I set alerts. So let me just show you an example of today. So if we look at today, for example, right, um, we can look at a good area. Let's go 30 minute. Let's go, hold on, 30 minutes, sorry. No break there to here. Okay, let me see if I can find one on the hourly here real quick. So, okay, in this situation, let's say we broke above this high here, right? Let me do a replay just to not confuse you guys. Where's the break? Okay, so let's say this was our high that we knew we had to break above, right, to continue to the upside. So let's see what happened. Cool, we broke, okay? So we broke, all right? Okay, we know we have an imbalance in order block here, right? So I'm gonna draw my fibs from the last low. Guys might be thinking, why am I not grabbing off this low here? There's no order block or imbalance there. There's nothing to come back to retest there, right? We do have imbalance that's come and retest here, so that's the reason I'm trying to mark my fibs from this low to the high of the break. And all I'm going to do, like I said, is there's no right or wrong answer whether you get in at the 50% optimal premium. You just wait for a reaction into those levels. So let's see, for instance, let's go to the small time frame now. So this is how we're going to plug everything together: our highs and lows, our range, our market structure, our order blocks and fibs. So if we look at the 15-minute here, for example, let's say on the hourly, this is your, let's say this is your 50% on the hourly, we already have marked up. This is your optimal, this is your premium. But most importantly, we know that this low here, right? I'm not going to draw a line so you guys can remember. This low here is your low on the 15-minute that caused what? A break above this high here, correct? Okay, so if it does come into here, into the 50%, your risk to reward is pretty much, now that it went bullish and you retest into 15-minute and the hourly, your entry can be here, your stop loss can be a close below here, and you target back at that high up there, right? Or you can wait for the optimal premium, but let's see what happened. You had your first bounce off of the 50%, right? Okay, cool. So you would have made some profit there, right? Okay, now we did break below on the 15-minute here. As you guys can see, we broke below on the 15-minute. So I would no longer look to long at the premium, right? I wouldn't look to long on the premium until we have a market structure back to the upside. So we know that the 15-minute went bearish, but let's go ahead and see if our hourly is going to go bearish. So we know that our hourly low It's right here, right? So let's go ahead. Let's press play. Let's see, did we ever break below the hourly low? Okay, so we held, right? Okay, so we know we're below the premium. We want to see it get back above the premium. We're not just going to long just when we're back above, right? Like I said, we're only going to long we have a market structure shift to the upside. So let's see where we can find that off the smaller time frame, okay? So we know that everything added up. The 1 hour is still bullish. You bounce off your premium levels. So let's see if we had a structure shift to the upside around these zones here. So where's the lowest low? Okay, here. And we broke above here. Okay, so we broke above, right? This low got broken, so that was the downtrend to continuation. This high got broken, so now we're bullish. Okay, so same thing. We have a break, we have an imbalance, right? We have these gaps here, we have our order block here. So grab our fibs from the low to the highest point here. So we'll do this. Boom, it came to your optimal, and you go long at the optimal. Why do you go long now? Because one, your hourly time frame, right? You're hourly held. You're hourly held. So now what your goal is having a market structure shift on the 1 minute to the upside. You want to remember time frames work as domino effects. So if the 1 minute's gonna break, what is that gonna do? That then is gonna cause a 5 minute break above this high here. Okay. Now when the 5 minute breaks, what is that gonna try to do now? That's now gonna go for the 15 minute high to try to cause the break that causes it to go bearish, right? So let's go ahead and back to the fibs just to remember that we're on fibs. So if we look here, right, we retested the optimal level here. Your entry in this point and your risk to reward would just be from this area here, and your risk would be that 1 minute a close below the 1 minute low because we shifted on the 1 minute. Like I said, you're playing this trade off a larger time frame. Your 1 hour held, and then you got a structure shift to the upside, and then above here we're getting above the premium. So your risk to reward was amazing here. Let's say you got in at the optimal, even if you got in the 50%. 23. What's the number? Because I can't really see. 20. Damn, I can't really see that number. I'm blind. What was it? 23. Oh my god, I really can't see. 23 337, right? So even if you got a 23 337, even here, right, boom, you get in here and you're going to target your 5 minute high. So where's your first take profit? Because you want to make your 5 minute go bullish, so then that causes your 15 minute to go bullish as well. So this is your take profit here. So your risk to reward makes sense, right? It's a 1 to 3.4. So amazing trade. And this is all off of simply highs and lows, market structure, your order block, your imbalances, and then your fibs. Now, do you guys see how my 4 step strategy all adds up together, and why I taught you guys, if you followed the videos step by step, you're able to see how they all plug in together, right? So that's for the fibs there, and that's off the hourly. So let's go ahead and do another example just to make sure you guys are following along and you guys understand it. Let's go ahead and remove the replay. I'll show you today. Today there was another example, just so you guys aren't confused. Just give me 1 second real quick and I'll do that for you guys. Let's go ahead. Okay, so today, okay, let's go 15 minute. Dun, 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 dun. Let's go 5 minute. Okay, cool. So off the 5 minute here, right? So if we focus on the 5 minute in this scenario here, we know that we broke above this high for continuation, right? We broke above this high for continuation, came back to retest, held a low, and pushed up, right? But for me, I wouldn't have took entry here because there's no other piece of confluence, meaning there's no order block, there's no imbalance, there's no other piece of evidence for me here to go long. So I'm just gonna wait till all my 4 steps line up, right? Now, if we would came down here, then possibly, because then we would have had an imbalanced tap, right? But let's just see, ride the trend up. Okay, so this broke above. Okay, cool. This high broke above. Okay, so now let's go ahead and plug the 4 steps into this scenario here. So now that we know that the candle closed above, right? Let's just wait for one more candle close and let's see what happens. Let's see. Okay, so now we know we have an order block. We had a structure shift to the upside. So our high got broken through. So now we have new lows, right? We'll focus on the low right here, right? This is the lowest point that caused the break of the high. We have an order block here now, which should be our support and should hold. And then now we do our fibs. So we know that this is our order block. This is our imbalance, our gap to come fill. We'll take our fibs, from the low to the high, and we'll wait for a retest. And then here it came to the premium, Let's see what happened after hitting the premium. Let's see, this was a valid trade. Boom. And then just bounced off right off your premium. So the fibs help you identify your entry and help you identify your risk to reward. So in this scenario here, if you got in on the premium, your risk to reward is a close below the order block low. You can use the order block as your support here. And then your first take profit, it's right at the high that pushed you back down to retest, right? And then after you figure out your TP1, you want to figure out your TP2 off your larger time frames. In this situation, will be the high here, right? And let's see what happened if we ever got to the high. Boom, TP2 hit, right? So TP2 hit, what happened? Once it hit, it had a slight little rejection here, right? And then broke above. So that's exactly how you use the fibs over and over and over. But most importantly, guys, this is now how you use all 4 steps that you guys have learned. If you watch the videos the linear way, you now know your highs and lows, your order blocks and balances, your ranges, and then how to use your fibs. Okay, does that make sense? So now what I'm gonna do now is we already did the 4 hour fibs, right? So we already know that the 4 hour is currently bullish. We know we have an imbalance here, so we'll go ahead and label our imbalance here. So we'll do this here. Boom. This is our 4 hour imbalance here, right? Cool. We have our fibs and we know, so what piece of confluence do we have here? We had a structure shift on the 4 hour to the upside. We have an imbalance here and we have our 50% area. So I would want to see a retest into this zone, and in this zone, I will look to go long if we can do something like this, break above the high, retest, continue back to previous day high and previous week high, right? So that's what I'll be looking for. Okay, now let's go look at the daily time frame from up, down. Have we broken below? So we did break below this low here. This is our previous week high, which is essentially our daily high as well that broke below here. We can draw our fibs, but there's really no confluence here off the daily for me to try to short. But let's see what happens. So today the daily slightly closed right on the premium, right? So it's slightly closed above the premium. So let's see what it's gonna want to do at this point. But we'll just wait for reaction here. So knowing that we're at the premium, we want to wait to see for reaction. So we want to see a structure shift to the downside, right? If we want to trade the down move here due to being at the premium, right? So we can just label this here as our daily, right? Daily. I don't have to put premium because I know that's the premium for me. Okay, what do I have here? What's this black? Oh, that was the high that we broke above, so I don't need to label that. So, okay, we have our fibs on the daily. We have our fibs on the 4 hour. Yeah, I can't do it off the weekly because no break in the weekly, and that's pretty much all the fibs I can draw out here. Now, I could also do it on a smaller time frame off the hourly, right? So, in case we don't get to the 4 hour, we do have here, even another piece of confluence, right? So now that we know on the hourly, we have a 1 hour order block where our optimal premium off the 4 hour is at. So this is a high probability setup and a high probability where we can come and retest into the optimum premium and then go long here. We have our order block, we have our 4 hour imbalance, we have our 4 hour optimal and premium. So it's a very, very good area here. Let's go see 15-minute. Really nothing for me here unless we break below this 15-minute low here, which is our order block, right? Okay, let's see, 15-minute low. And we can actually do another example here, right? So we know that we continued higher, maybe on a 5-minute it broke. Let's see, where did this break happen? It was on this one here. Okay, that was on that one, but off the 15-minute order block, let's see, what did we bounce off of with our fibs? Right at the 50%, right off the 50%, the imbalance, and just push right back up, right? But that's pretty much it for the fibs. Very, very simple, guys. Don't overcomplicate it. And remember, if you guys made it this far to this video, right now, class 1, follow the ebook exactly how it is. Mark up your previous day highs, previous day lows, identify your range, your highs and lows, the market structure, whatever side we're in, right? If the shift happened to the upside or downside, you can follow it, find your order blocks, whether it's in the resistance area, whether it's in the support area, and then, like I said, use that market structure shift with, like, for instance, today we went back bullish. We drew our fibs for the bullish retracement, right? And that's going to be off the 4 hour zone for me here.